Hello, friends. This is Giuliano. It is the 5th of April, 2022. We've just turned to the 6th of April on the UTC timeframe. So the daily candle closing of the BTC chart. It's time for a BTC pump update. And yes, it's a BTC pump update for now until we are invalidated. What do I mean by that? Well, welcome. I hope that this is going to be helpful, informative for you. Something to consider. If you've been watching along this whole time, then so glad to have you here, and I hope this has been helpful. Now, considering that this is potentially the end of that C-wave pattern down here at this final triangulation for a fifth wave made to be ending here as currently the count around 61.8% of the original big A wave here, okay, becomes this C wave. Now we've pushed up higher to a point of resistance here, which is around this 200-day moving average on the underside of that. So we did reach there on the upper end of the Bollinger Band here as it rolls up. Now we've come away from that. It was a significant price level of resistance, and now we're retracing, which is understandable in any impulse. Through you get the impulse move like a 1, 3, or 5 wave. In this case, we're expecting a 1 wave, and then a 2 wave comes after that, which is corrective. So we're in a correction. So the question is, are we still in this move up? That's what I'm thinking, yes. However, the invalidation really is around here, around $44,500. If it really starts trading below there and it gets rejected as a support flipped to resistance, and keeps, then going down further, and then all of this becomes muddy and not clear. But for now, we're clear. We're clear that this C wave is over, flat pattern over. We're in something new. It's a 1 wave and potentially 2 wave of something hopefully much smaller that would be composing something even bigger. Okay, but we'll see. For now, we're watching this very local action in here to say what is going on. So we rejected off the 200 period average. Okay, we've come away from the top of the Bollinger Band down towards the 20 period moving average. So 200-day moving average rejection to the underside of that, so it's above the price, and 20-day moving average now looking to be support, which is below the price, and then hopefully we squeeze through all of that. Okay. Squeeze through all of that. We're looking at this line here for now as the line in the sand. After that, we flip to the bearish side. Until then, we're in the bullish side generally. Looking to squeeze a bit. And then in terms of time relationships, now we start to look at time relationships and say, okay, we've started here. Let's say maybe we'll argue we started here at the first push up, but we'll take the green candle, low to high. Actually, we're actually going to change that. We're going to take the wick because it's the low price. Okay, so now we're at about 1-to-1. The correction is roughly 1 unit of the impulse up. So that's reasonable. We could turn around anytime. Maybe it's going to take going all the way to the 11th or the 14th even of April in terms of the duration, because the correction is usually longer than the impulse up in this case. And so we'll look for that. So yeah, any time it can turn around, but maybe the pattern itself is not completed. The energy of the move to correct this force up, this corrective move energy is not done yet in order for the ability for the move to continue higher. So one thing I'd like to consider then also is the Ichimoku cloud, which we haven't talked about. We're still within this big Ichimoku cloud, but the upper band of the cloud is quickly retracing back to the downside. And we are looking at a potential flip here of the cloud, a twist into a green cloud, which would be bullish if that can go forward as green cloud, and also the price staying above. And yeah, that's very bullish. And that would mean probably we're breaking that 200. As soon as we break the 200, and especially if we hold it, although who knows if it'll be even given a chance, maybe on the next, well, we'll see. Anyway, I'm not going to speculate. Yeah, as soon as we get above that 200, but below this 20 really, which means below this 44.5, it's very suspect, especially if it gets rejected and then you're further down. And when we go to the lower time frame, you'll see like As soon as we start here, that's the other thing I wanted to say. We also have a line in the sand, which is created by the 61.8% retracement from the end of the pattern here, which we're saying is about here, this E wave. Although technically it could start here a little higher at the beginning of that green wave. We're at about 50% retracement now. 43.33 is actually really the technical line in the sand as per Neowave. If we're pretty accurate with our choice of beginning and ending of the move, then yeah. So if we want to be a little more stingy and we take from the green candle, then you have until 43.5. So about 43,500 really is the line in the sand. So this line in the sand up here is not as big of a deal, although we rejected it first, and if the more you start going down below, and if you get below this 20-day moving average, then it's less strong. So a good maybe that's why I'm leaning towards some sort of triangulation rather than some sort of let's say flat pattern. But it could still work, and we could still be down here and below that 20 and still be okay in terms of impulse correction, impulse 5-wave moves. We're not going below 61.8%, so that's a trending move up, and we're getting an impulse is the expectation. So there you go. That's reasonable. So even 43.5 can be a decent line in the sand, and but that's very hairy, and it signals less strength. I think a good strong 50% retracement is, when I say strong, I mean it's not having to go down as far. I mean, it's not as strong as 38.2 retracement, but maybe it's going to end around a 38.2 retracement, which itself in that way is strong, even though, let's say, however, the pattern itself did retrace like 50%. So from low to high, 50% of that. So anyway, here we go. Like, this is the time. So it's coming. Right now, we had just finished the day. This is a new daily candle. So it's giving a dump below 45K here. So let's see what happens. I think it's definitely going to come clear in the next couple of days for sure, because there's going to be volatility to one side or the other. And if it is a triangulation, then we're expecting the volatility to push to the upside anytime now, because yeah, we'll take a look here. But anyway, it's still possible, like I said, to go down to this 43.5. So I guess at that point, that's when you really want to be, that's what I'm going to be really heavily questioning this whole count. Until then, not yet. And that's the beautiful thing too, is there's this sense of invalidation, and it's clear. And so that's good. I like that. That's what I like about this Neowave approach. So let's watch 20-day moving average squeeze from below, 200-day moving average squeeze from above. Price can triangulate a bit more, spend a bit more time correcting, and then let's say by next week, it could push higher in an impulsive move. So that's the idea. And in that sense, targets, if you want to play target games with price, let's say you start from low to high and you extend from about here, and you're like, okay, 1-to-1 is 52, 161.8 is 58. I'd say you really want to shoot to the 161.8 because that just leaves a lot in the dust, and then creates a new range between these price levels and this price level. Anyway, we'll see though. It might go first 52, come back down to this 200, but then you're really chopping too much. You want to go faster. That's what I would say. Strength really brings you to this 161.8 very quickly. All right, we'll see. Look forward to seeing that with you. So let's jump down to a 4-hour time frame just to take a closer look. Wow, okay, maybe a flat pattern it is. So, okay, 44.5 is right now. So we're getting some good indication right now. I'd like to, wants to go pick some up on the low. Yeah, so, okay, we're not doing a triangle. So I'm glad that's happening now, because at least I have a better idea. So we could be flat patterning it. And in that case, we'd be near the end. So either you're near the end flat pattern, or we're going to have, yeah, something else is happening. So I look forward to seeing that. I was set up for a triangulation. It was where the price was right around that 61.8% of this potential A wave. I was thinking something like this. We were getting the B here. The C was kind of around here, about 61.8% of the A wave. And then I was thinking a D and an E, and then we could get out of there by either the 9th, or even if you needed to go to the 14th, it would stretch. But yeah, now at this point, now that we've come so far down with this potential C wave here, because this is a big fast move, so it's got to be something like an A wave. So now we're looking at something like this. It's probably happening here. So a C wave. So is it going to be over now? Let's see. Where are we? Let's take a 1-to-1 extension of the A wave. And we're about, yeah, there you go, 43. So looking for that. Maybe you're going to be lucky and get something with a failing C wave. And that would be at a 786 there. Okay, fine. But in terms of time, it's a very short wave compared to the A wave. So, well, it's actually 1-to-1 at this point. The purple is 1-to-1, and you're on that. So, wow, what a fascinating scenario that is happening before our eyes. But anyway, okay, I'm going to get away from this. Don't really have much else to say. The other one would be to retrace the B wave. So let's say from here to either here. It's already at 1-to-1 nearly. Maybe if you want to go here. Yeah, so that would bring us at 44.2. So interesting. We'll see what happens. I think we're still in really good position. 4-hour time frame. We're within this cloud. It's got strong support. But having said that, we're stretching out those Bollinger Bands, and yeah, it's well, here's the buying pressure on the underside. So we'll see. We shall see. Very exciting to see what's going to happen going forward. Stick around for more. This is, even though the price is falling down, this is still a BTC pump update. Maybe we'll get a more complex correction. So this is our first part, and then we'll get some X wave and continue. I don't know. Let's see. Let's do a bit of channeling. Fun of it. Where are we now? Here. No, probably we're going to go 0 to B trend line. Roughly. Going to do something like that. We're doing what we don't want it to exceed. So in that case, I mean, who's to say, no, I don't like down here and there. So anyway, at this point, maybe this pattern is too complicated. There is definitely too much complexity here really to be saying anything specific, but look for that move down to the 44K. And if you can bounce off this type of support level, then you're pretty much trying to end this move. But anyway, okay, cool. Yeah, I think it still stands. It all still stands. And it's just the only thing that changes is I'm not looking at this as a triangle anymore. Definitely much more looking at it as a flat pattern. That was the other option. And that's what it looks like it's playing out. So let's see. It'll be clear in this next week for sure. Okay. About next, yeah, until next time. So I think that's it. I don't have much else to say. If you have any feedback for the comments, put them in there. Here we are looking for that support at the 20-day moving average. Wow. All right, get in it. Wishing you all well. Okay, until next time, goodbye.